Hello and welcome to this virtual meeting of the USA alumni chapter of our alma mater, the KU Leuven. My name is Peter Van Ham and I am joining you, as you can see, from my wonderful home office with behind me a legend of the KU Leuven, Mercator, of course, from the maps. That's not what we're here to talk about today. We're here to talk about the macroeconomic impact of the COVID-19 crisis. And to do that, we have a wonderful set of panelists, all KU Leuven alumni, or let's say friends of KU Leuven alumni, to talk about that. We'll get to them in a moment. But before we do, I have the particular honor to welcome our one and only Rector, Professor Dr. Sels, who will be introducing the debate. I should perhaps start by asking you, Professor Sels, of course, we can see that in your offices in Leuven, I assume, in the Rectorate. How are things over there? I think if we were students today, we'd be thinking we must be in the library studying or doing some exams in one of the wonderful aulas of our alma mater. Is that what is happening right now in Leuven, or what is happening? And we're going to just ask you to unmute so we can hear you speak.
Even after 4 months of living online, I still quite frequently forget to unmute, so my apologies for that. But actually, the situation you described is actually the current situation in Leuven. We are, to some extent, an outlier in continental Europe because we decided very early, actually, at the time that the pandemic was really peaking, to organize all the exams, almost all the exams, on campus. And that was a decision that, in those days, that caused a lot of anxiety among staff and students. But today it seems to be the right decision. So, to give you an idea, we currently have 86% of all the examinations being organized on campus in Leuven or in one of the 12 other campuses that we have. And the percentage of online exams is limited to 14%. So we are on campus. The city is really full of students, and it's quite lively outside right now. So, and that maybe is also in line with the current situation in Belgium. You may all be familiar with what happened in Belgium. The pandemic hit us quite severely, with a total of 10,000 deaths and an excess mortality rate, which was also to international standards quite high. But today the virus circulation is, let's say, pretty low, around 100 new infections a day. So life outside is relatively safe, and that's why we are able to organize the exams on campus. I must say, thanks to draconic measures. So we only use 1 seat in 8 in our lecture halls.
So no opportunity to cheat this time around by looking to a neighbor.
They are simply too far away. So it's the neighbor, I mean. So it's that's almost impossible. We are using a lot of premises outside KU Leuven. So we, for example, those of you who are familiar with Leuven, we have exams going on 7 days a week, including Sunday, in the Brabant Hall, in the football stadium of OHL, the local football club.
Literally?
Using, yeah.
In the stadium?
No, not in the stadium, in let's say, the halls surrounding the stadium, but it's in the stadium, yeah. Ancien Belgique in Brussels for the students studying in Brussels, and so on and so on. So it's logistically it has been a nightmare to prepare it, but so far we haven't experienced any incidents. So it's all going very smoothly.
That's extraordinary, and of course we hope that indeed it all happens safely and everything goes well. I'm sure that was not the case the last couple of months, was it? Lockdown started in Leuven mid-March, everybody gone, ghost city. Is that what it first looked like?
It looked like a museum, a ghost city. That's correct. So I spent most of my days, also in March and April, at the Rector's office. but quite frequently I was the only man in the building. Yeah. No one around in the street, so it was scary. So we went online even before, we decided to go fully online even before the first National Security Council had its first meeting. So we were, let's say, a front runner in let's say, preparing for this pandemic. And we stayed online until the end of the semester. I must say, we are also a research institution. So we already quite early in mid-April decided to restart research again.
Yeah.
Let's say the more expensive experiments in the labs. Today we are organized in what we call the norm of the half. So people can spend the half of the working hours in their office with a maximum of half of the team being present. So that's how we cope with the current situation. And that allows us to continue research. Yeah, it allows us to continue research, but with physical distance.
Now, of course, Belgium was in a particularly bad state during the pandemic. Even now, a lot of cases compared to its peers, its neighbors. You mentioned that you changed some of your, or you were able to go back rather quickly to your research labs. We heard some cases of Oxford, for example, Germany, some universities where universities were able to transform their research labs into testing labs of COVID-19. Testing, of course, which also was early on in the epidemic or the pandemic, a big problem. Was Leuven able to play such an enabling role for society as a whole?
We have been, I think, we played a very special role in several areas. So first of all, we and you were able to follow that, Peter. We were in touch over Twitter and through other social media on what happened with Leuven, but we were able to put enormous pressure on the federal government in the early days, the days before the lockdown. Managed to convince them to move towards the lockdown. We already started with the crisis committee late January, and that was due to the fact that we had so many students and staff in China. Yeah. So we saw what was coming. I spent, together with Peter Leuven, 12 days in Australia in February.
Rector Leuven, of course, is responsible for international affairs.
Yeah, he is responsible for international affairs, and we were together in Australia. And Australia, in those days, already had a complete ban on Chinese tourists and students entering the country. So we already got some perspective on what COVID-19 could have as an impact on society, and that's why we started negotiating with the federal government already early March, convinced them to move to the lockdown. And then we installed our own test capacity at the academic hospital, of course, where we have this beautiful Rega Institute, the top virology institute with a biosafety lab that is really
many, of course, who are also part of the Council of Experts that advises the government on their policies. Yeah. So, you know, it sounds like we've got all these world-class, situations in place, but of course, and early warnings. Yet not able to avoid the disaster for the country that our country found itself in. How come? What went wrong?
Everything. It's part of it is I think due to the political situation in Belgium, with political parties not being able to come to a compromise on organizing a federal government. So we had this ad hoc government that is still trying to lead us through this pandemic until today. So having no active government with, let's say, an active majority, simply led to kind of a paralysis in society and in political decision making. That is part of the explanation. But actually, we've seen the same pattern in the surrounding countries. France was a bit faster, but also the spread of the virus was also a bit more active in France compared to Belgium. But the bottom line is that without the very active role of, I must say, the University of Antwerp and the University of Leuven, and the two together really joined forces in the very beginning, in the early days of early March, actually, we would have been in much deeper trouble than we already find ourselves in right now.
So that's, of course, another way of looking at that, what happened in our country in the last couple of months. It's good to hear that inside story. Now, looking ahead, and then we get to our panel, what's next for the university and what is next for our country, do you think? Are we going back to, let's say, quote unquote, normal at the university, everybody back in a class in September?
So when I regularly talk to the biostatisticians in Flanders, not only Leuven biostatisticians, but the group of the exit group that is trying to guide us through this pandemic. And what they say is that there is a very good chance that, and that's their great concern, that in October, November, the pandemic might flare up, a second wave, which is actually the consequence of the massive opening of the schools early September. And then a second period of, let's say, high risk is January, February, when you may have that combination with the flu epidemic and with other infectious diseases that are also peaking in the same period. So what we are trying to do, we need to be very well prepared, but at the same time, we are following the same logic as we are following right now with the examinations. We will try to approach normality as closely as possible throughout the next academic year. So try to organize the maximum possible on campus with a special focus on the first year students because they are new in higher education.
Of course.
And on, let's say, all the courses that include a practical component like seminars, practicals, lab experiments with students, tutorials, things like that. So, and then we will try to organize ourselves according to, you could use the metaphor of an accordion, yeah, moving up and down depending on the degree of virus circulation. And that's actually my main focus today, that is trying to, let's say, design and develop a model that will allow us to always adapt very quickly and to be as flexible as possible, always, let's say, trying to match the level of virus circulation, but with a focus on organizing the maximum possible on campus.
And no doubt, of course, also with a particular attention, I assume, for the situation in dormitories and in bars and cafes. I can imagine, if I think back of my student days, if we were to repeat some of the practices that we had then today, I think we would have an outbreak within hours. How do you deal with that?
Student bars have to adhere to the rules that apply to cafes and restaurants in general. So that's quite easy. Students are very welcome to look for a student room in Leuven, and we invite them to stay longer before returning home. So to stay, let's say, within their social bubble here in Leuven for a longer period, maybe 2 weeks or 3 weeks before taking the weekend with their family. We are setting up a joint committee together with the police and the student representatives to, let's say, give ex ante approval to larger events, student-led events. So I think we will be able, and we are quite well prepared to let's say, move towards a very disciplined campus life here in Leuven. Maybe one special dimension that is worth mentioning is internationalization. So which is what is quite special for Leuven is that we currently are experiencing a 13% increase in admissions of international students for next academic year. And we try to welcome, if the borders allow them to travel, if other authorities will allow them to travel. And we will try to stimulate student mobility as much as possible. But of course, always putting safety first as the top priority. That is the first and basic principle. But the second important principle is that with, let's say, compliance to safety regulations, we will do whatever is possible to organize a relatively normal campus life here in Leuven. And that will include using tracing apps within the student population, increasing our own test capacity, strict regulations on wearing masks, for example. Ventilation will be a very important factor, and hand hygiene. So physical distance is only one parameter, and people are overly focused on that single parameter, while all the parameters together allow you to do more than people can believe today. Yeah.
Absolutely. So we look forward to of course, seeing what happens, and indeed share with you your hope that the situation will indeed remain manageable, and then hopefully a silver lining, as we hear it, the internationalization of the KU Leuven will be able to continue. Now, thank you, Rector, for that introduction. We're back into the world of Leuven now, and I want to turn now to a couple of the other panelists that have joined us today to talk about the macroeconomic impact of COVID-19. We've seen now what it means in our own campus, in our beautiful city of Leuven, but what has been going on in the world? That is a question that we'll be debating today with three absolutely exquisite, splendid panelists. I will introduce them to you very briefly. There's Daan Struyven. He's a senior global economist at Goldman Sachs, got his PhD from MIT, not from Leuven. I have to say, of course, as they say, nobody's perfect. I would suggest there as a comment. Then we have Jan van Hove. He is the chief economist of KBC Bank, of course, in Belgium. He did get his PhD, I think. We'll hear it from him in a minute, from Leuven. And then we have Jan Loeys. I have to say Jan Loeys, because we, of course, can pronounce his Flemish name. It's a little hard for the Americans, I think, up to this day. He's managing director, has been many years with JP Morgan, managing director there now. Normally, I assume in New York City, but joining us today from lockdown or partial lockdown in Georgia, in the south of the United States. We were going to be joined by Nathalie Muile, the federal minister of economy, work and consumers. She unfortunately had to go to a parliamentary commission and sent us a video message instead. We'll be using that video message, and I think you've all received that. We'll be using that throughout our conversation. Without further ado, I want to now turn to Daan. Daan, okay, what has been going on? Yesterday, we heard from the International Monetary Fund downward revision of our global economic outlook from -3% to -5% globally, from -6% to -8% in the United States, and up to -10% in the Eurozone. What has been the macroeconomic impact of COVID-19? And we'll also unmute you.
So the corona crisis has clearly been the deepest recession, at least going back to the Second World War. Our estimate is that global output fell by about 17% between mid-January, mid-April. However, with global reopening, we think we're sort of back halfway, and that the decline in global output is now around -9%. So a very, very deep fall. But the reopening has already led to a significant pickup in output. And I think that sequential improvement has been made possible because of very strong policy support, fiscal support globally, and monetary support. And also the fact that this recession is unique. The main reason activity is so weak is a physical constraint to protect public health. Now, looking ahead, we think that this recovery, which currently looks like a V-shape, with, for instance, the level of activity in China already back to the level of a year ago, we think that this initial V-shaped recovery—
Back to a level of a year ago, meaning that China is now where it was a year ago. It had its V-shaped recovery.
Yeah, if you look at the high frequency indicators in China, the level of output is roughly back to where it was a year ago. Of course, China is growing, trend growth 6% per year, so it's still 6% below where it should have been. But even in the US, core retail sales in May were back at its February level. However, from here, we really expect the recovery to slow significantly for two reasons. One, the medical news is very mixed, with bad news coming out of Latin America, India, and some southern and western states in the US. Better news in the northeast of the US and in Europe and in China. And second, and that's very much related to what Rector Sels said, if businesses are very organized, very focused on organized activity while protecting health, we think that's relatively feasible in sectors such as construction, manufacturing, but it's going to be much harder in service sectors requiring a lot of face-to-face interactions. And so we think it's going to flatten out.
You mentioned last week, as we had the privilege to speak also 7 days ago, that you expect, we always want to know, is it going to be a V-shaped recovery, an L-shaped recovery? All kinds of letters are thrown into the mix. You had an interesting addition to make to that alphabet, didn't you?
Yeah, so our base case looks for a Nike swoosh with like a strong initial recovery and then a declining sequential pace of improvement.
A Nike swoosh.
Nike swoosh. But I do think that the medical outlook is very much the key driver of the economic outlook. And to be honest, the news out of some states in the US over the last few days poses significant downside risk to the forecast for activity of ourselves and many other forecasters.
That is rather concerning, isn't it? And I wanted to turn to Jan van Hove, but before I do, just to react to what you were saying, maybe a reaction from Georgia. Jan, Loeys, you are there. Isn't Georgia one of those states that had an early reopening and then a spike in cases? In certainly that was the case in Florida, wasn't it?
Yeah, this is what we call a blue and a red state, Republican state here. There's, relative to Europe, not as much belief in government. Basically, a lot of people, America is true by character, don't trust governments, don't trust the elites. And as a result, there's a lot of people who poo-pooed all the way down from the White House what has been happening. Now they're paying the price, and I'm agreeing with Daan. This is we'll see some damage over here. They're going to have to learn from that. They're probably going to have some on and off economic activity measures here.
So we'll see, of course, what consequences that will have in the long run. But first, I want to turn now, thank you, by the way, Jan Loeys, for that report, let's say, on the ground in Georgia. But I want to turn now to your colleague, fellow Jan van Hove, who I think must be in, at least in Belgium, but perhaps even in Brussels, aren't you? What has been the impact of the COVID crisis in Belgium? We've heard from the Rector what it was in Leuven. And for those who watched the video from Minister Muilen, she talked about numbers like, at some point, 20% technical unemployment in Belgium, 1.2 million employees at home at some point, and a -9% economic impact were some of the numbers that she indicated. By the way, that the 20% technical unemployment, I think, is wrong, but the 1.2 million technical employees certainly is a number she mentioned. What is the situation in Belgium right now?
Hi, Peter, and thanks for having me. So yeah, in general, indeed, the economic situation in Belgium is quite bad. And I think in line with the global developments that Daan was just describing. In general, actually, what we saw in Belgium is that the lockdown started relatively early compared to many other countries. So you had a quite severe hit already in the first quarter, approximately around the European average. There was a growth contraction of 3.6%, but the major hit will still come in the second quarter. Now, the good news is definitely that as we are reopening the economy, the damage might be partly mitigated by the reopening, by some other policy initiatives. But still, we expect that the second quarter will lead to a hit of around 16%. And if you basically, well,
16% minus
16,
economic
minus
growth.
16. So that, well, even the first quarter is unprecedented. So if you then think about minus 16%, that's horrible. Now, we are quite optimistic about the recovery, and we do expect that recovery has started actually in the second quarter and will continue in the third, fourth quarter of this year and into 21. Unless, of course, you get the second wave. And that's a very crucial assumption in any kind of macroeconomic modeling at this moment. In normal circumstances, I always prefer to have one scenario, one economic scenario. You have a couple of risk factors around that. That's no problem at all. But now it's simply impossible, because once you get a second wave, the economic damage will be much worse actually than what you get if you just get a slow but gradual recovery as we see it today. So we are currently working with two scenarios. A base scenario where we expect that the Belgian economy as a whole will have a growth contraction of minus 9.5% for the entire calendar year. And then, okay, a rather strong recovery next year, around 5-6%. But in our more pessimistic scenario, where you get this kind of second wave, then you will have a drop in GDP growth of minus 13%. And also next year, there won't be any recovery yet. So you get even a further contraction into 21. So that's
absolutely
yeah,
terrible
that's
numbers.
horrible.
That is, it sounds, and of course, a huge impact. We must say on the government, who is meaning to carry, of course, a lot of that burden, especially in countries like Belgium, with a big welfare component to the government. What can we expect from the government that is already loaded with debt? Can it still manage such a situation, Jan van Hove?
Yeah, well, to be honest, I think the policy reaction in Belgium was the right one, the initial policy reaction. Namely, you get a massive increase in temporary unemployment. In the meantime, by the way, it dropped back to 15%, but there are huge differences across sectors. So that's the right reaction. Basically, you try to protect people's income, you try to protect your companies, you give them credit lines, temporary credit lines, and so on. So that's all fine. The problem is, of course, in the longer run. And then we come back to what Rector Sels was already mentioning, the complexity of our state structure. It implies, of course, that any recovery plan in Belgium takes so much discussion, so much time. There's no agreement between political parties at this moment, not at the federal level, not at the regional level. So therefore, the recovery in Belgium will be much slower than what we see in other countries. The good news for Belgium is, of course, that our main trading partners are investing quite heavily in a recovery plan. I think of Germany in particular, France as well. On top of that, you have the European Commission now starting a recovery program and a resilience program, as they call it officially. So that's all good news for a small open economy as the Belgian one. But nevertheless, a slow policy reaction in the recovery phase. On top of that, of course, the actual impact when unemployment figures will go up, when number of bankruptcies will go up, and so on. And then we just started the crisis.
Right. So a lot of uncertainty ahead. Now, some people might get a little bit confused if they look at some of the short-term indicators, especially in the financial markets. Jan Loeys, I mean, what has been going on? We see on the stock markets absolutely casino activities in terms of up and down and in all directions. What have we seen? I mean, if the economic outlook is as bad as Daan and Jan van Hove have said, then surely even an optimistic stock market investor can't say this is going to be perfect in the next 12 months.
You got to remember that the stock market does not price the economy. Stocks are companies that are pricing earnings. So they're only looking at where companies are going to be making money. The rest is not what is being asked of the stock market. In the last 20 years, we had pretty poor growth. The profit margins doubles. Companies made a ton of money. That's why the stock market is up. This is so far, our guess is a 2-month recession, shortest ever. The bottom was probably in the US in April, already rebounding on here. The past is the past, nothing you can do about it. You're pricing in the future. And so far, we're looking at a nice rebound. We're not going to get to the same overall earnings as a year ago. Most importantly, what is happening is that because of the pandemic, people's behavior is changing. Some products and services they were buying in the past, forget it. Now it's all technology, anything online, healthcare. We're going to be in a zero bond yield world for a while. So what does it mean? All your tech and your healthcare stuff is booming because that's where all the money is going to go to. The zero bond yield world, that means the banks are going to not be producing well.
Yes, so that explains to a certain degree why the stock market is as high as it is, especially those that are focused on tech stocks such as the NASDAQ. Now, one thing that I also want to ask is, we kept hearing in the last couple of years that so many companies, so many investors had so much money, so much cash that they didn't know what to do with it. Now we hear on the other side a story from Jan van Hove, governments taking on enormous debts to unseen levels sometimes. I hear a match. I say investors have the money, governments need the money. Is that a possible solution?
Well, that's what's been happening. We have saving surpluses. The corporates now have more money than they're investing. Yes, you're in a low capital spending world. The companies make a ton of money from globalization, reduced taxation. tax arbitrage all over the world. A lot more than they're investing, they're becoming savers. The governments, until now, actually, government debt did not really rise that dramatically. Yes, it did to some degree, but that saving surplus is keeping your interest rates low. And I think we're going to be around zero in the dollar world also, not just in Europe, for the next about 3-4 years.
Right. Thank you, Jan. And I saw that Daan wanted to come in there. Daan, your reaction. So lots of debt being piled up. People are worrying, isn't this going to lead to an inflationary environment and a situation where governments are not going to be able to pay back their debt? Yet you say quite convincingly, yes, sure, investors have money and choosing to invest them in bonds, it sounds like a good idea.
Yeah, so I think policymakers did the right thing. If the government had not stepped in to save companies, to save employee-employee relationships, you could have ended up in a Great Depression, where weaker activity leads to weaker demand, to weaker activity, and you get into a bad spiral. So I think it was the right thing to do. Now, looking ahead, is this all sustainable? I think the key thing here is to recognize that in countries such as the US, which have an independent central bank, as long as interest rates remain so low, that you can sustain higher deficits. Debt servicing costs are actually not rising significantly thanks to the very sharp decline in interest rates. The issue, of course,
or perfectly normal?
Sorry?
Is that an irrational situation, or do you say that's the new normal?
It looks like the new normal. However, it's more challenging for countries such as Belgium or the south of Europe, which do not manage their own currency and which do not have their own central bank. In places such as the US, if for some reason inflation were to accelerate sharply, we don't expect it with unemployment rate being so high, but in inflation actually having been too low over the last 10, 20 years. But if it were to happen, the Fed will have the option to accept somewhat higher inflation for a while, and the Fed could finance some of the elevated deficits of the government, and it has already been doing that this year. It's harder in a currency union.
Once again, you're saying, you know what, the US is going to come out quite all right because, of course, it prints its own money. It is the reserve currency of the world, and people have to put their money somewhere. So probably that's going to be okay, despite the mismanagement perhaps in some parts of the economy. Yeah. But you're less bullish, it sounds, on countries like Belgium, who don't manage their own currency, who have not just super high deficits, but of course high historical debts. It's a story we've also heard before. But in the previous crisis, actually, there was a moment of panic, interest rates going up quite significantly, but they came back down. And also Belgium is not paying high interest on its debt.
Yeah, I think it depends on the ECB. And while initially the ECB's reaction was weaker and slower than the Fed's response in the Corona crisis, now the reaction now is stronger, and sovereign spreads, the rise in sovereign spreads has been limited. But I'm not that negative on Europe actually relative to the US for two reasons. One, despite more limited fiscal space, the ECB and fiscal policymakers at the European Commission are stepping up. Second, the medical outlook looks much, much better than in the US. And actually a third reason is the lockdowns were just much more intense, and the fall in output was much deeper in March and April. And so mechanically, when you fall very low, it's going to be easier to bounce back, at least initially.
So I think there's some hope also for Belgium, but what you're saying is we do need, of course, smart, sound economic policies. Now, Professor Sels, if I can come back to you for a second, you talked about how good it was that professors from KU Leuven, of course, medical doctors, people, virologists, etc., that they were advising the government early on in the crisis for the lockdowns. Should we then have the same on the economic front? Should your colleagues at the Faculty of Economics, should they just form a new committee of experts and go and advise whomever is going to be the new government in Belgium on their economic policies going forward?
Let me first unmute, and well, that's actually what we already initiated a few months ago. We late April we decided to set up a post-exit COVID-19 working committee under the umbrella of Metaforum, and Metaforum is the platform for interdisciplinary research within the university. And there's an expert committee led by Erik Schokkaert, the economist. André de Koster is also participating in the same team.
I think I know them as my former teachers.
They received a 300K budget for short-term initiatives in let's say, study of the socioeconomic impacts, including effects on the organization of the healthcare industry, poverty, political decision-making, and how we can improve governance, things like that. So let's say socioeconomic recovery, but broadly defined. Yeah? Yeah. And they will now table a first report in 1 week. So they promised me the report by the end of next week. And then we will decide on, let's say, the next stage, and the next stage will table that same, will be to table that same report at the governmental level. Hopefully to stimulate a few additional research lines, but also to have strong policy advice.
Absolutely.
So we are flanking the virology expertise with socioeconomic expertise.
I mean, as a graduate, of course, of the Faculty of Economics, I'm happy to hear that. I'm sure my father, who is, as you know, a virologist, would root instead for the medical department, but that's all right. We want to get to a couple of questions from the audience as well. We've got a wonderful set of people dialed in. I even see, by the way, Professor Sels, you're being shadowed by your Vice Rector, Leuven, who's also on the line, and a couple of other prominent guests that we have with us. If you have a question, please put it down below in the Q&A box. We will get to those questions in about 10 minutes. First, I want to ask two other trends. If we look forward, if you look ahead, macroeconomic trends that surely have been accelerated by the crisis. One, deglobalization, and two, digitization. If I can come back to Jan Loeys, perhaps, you know, we're seeing those trends already in action. You, I can see, just as all of us, digitally working, not a problem at all. Is that indeed a major trend? And what does that imply for economies such as the United States and Belgium?
Deglobalization started already. In the last decade, we had peak globalization. We didn't globalize further, but we didn't really go down. It's the past year. I'd say in particular the US-China, we call it the great nation conflict. Is it a war? Absolutely. It's a cyber war. It is pretty bad. This is going to keep going on. Two economies are delinking, no longer want to depend on each other. That means technological war, basically. This is going to be with us, irrespective on who is going to be in the White House next year. So deglobalization continues. Europe had this danger also with Brexit and with everybody going on their own. I'm very, very happy and excited that Germany, I think, and France are now leading the building of a united fiscal policy within Europe. That's absolutely what we need. Digitalization, social distances, is that going to continue? Yes, but not extremely so. Working from home, social distancing is enormously economically damaging. If we're far away from each other, we're very unproductive. You push people together on trading floors into big cities, into Silicon Valley, we are a lot more productive. So I think the social distancing is going to be fading. Finally, what's the impact? Deglobalization is uniformly bad for global productivity growth. The last decade, we've seen about 1% global productivity growth, ex-China and India, because we don't
right.
Data. You give a bit of population growth, it gives us probably in developed market barely 1% normal growth. Deglobalization is worsening that. Digitalization, I don't think we'll have that much.
Go either way. Now, if we look at those trends, those macro trends, Jan van Hove, deglobalization, the decoupling of the US and China, Jan Loeys confirmed that is happening, is already a reality. Of course, for an open economy like Belgium, must be a disaster. Isn't that right?
Well, indeed, and that's I think what you see already today, that there is a serious drop in exports, international exports, and you see that small open economies like Belgium are very vulnerable. And if the situation continues, and I agree with Jan Loeys that indeed deglobalization has been a trend for the past decade, and it's just a trend that will be continued. That will be very bad news for small open economies. I think what's for me the new factor in deglobalization is what I would call economic nationalism. Because what we see today, it started with trade, it was actually a technology war, I understand. But at the same time today, you see that governments are taking all kinds of mitigating policies, in the aftermath of the corona crisis. But these kind of policies actually always favor domestic companies. Look at what Germany is doing, look at what France is doing, look at what the US is doing. You see it in all countries. And then the problem is, of course, that small countries cannot afford, they cannot afford, in particular not Belgium, because basically, given our public debt level, we cannot even think about kind of nationalism in terms of economic policies.
And we can't even make masks. So we're really not well off if it's going to be a protectionism.
So I think we are heading from, let's say, an era of deglobalization into almost an economic war period, where nations will fight and try to protect their domestic interests. And for small countries, that's very bad news. So you need a lot of economic diplomacy to survive in that kind of environment.
Right.
So,
and perhaps one of our best economic diplomats, if I may say so, is somebody who's in our chat, and as well as his boss, Professor Sels. I think that when we look at the relations between Belgium and China, at least, they are optimal on the university level, aren't they? Because I think we've even made a recent new agreement with some Chinese universities. I mean, if you see what the macro trend is, deglobalization, decoupling of the US and China, are you providing a counterweight for that for Belgium?
Well, I think in general that's what we need. We need more cooperation between universities.
If I can maybe ask you, Professor Sels, if he's still with us to give a short reaction to that.
A very short reaction on the university policy. We are, let's say, indeed strengthening our collaborations with very remote countries, I can say. So China is a good example. We are very close to an agreement on a quite impressive number of joint PhDs with Peking University, the #1 player in China. We, by the way, recently also agreed upon a significant volume of 30 joint PhDs with the University of Melbourne. So from an academic perspective, we are actually globalizing. Yeah. But that is how research is organized, and research follows completely different dynamics compared to business and industry. By the way, it's actually now the US who is really refraining from further collaboration with the recent decisions on, let's say, limiting the number of international researchers within the country. So the rest of the world is collaborating quite intensively, without any doubt. So,
But I hear you saying the big nations may be fighting amongst each other. We're not going to participate to that. Our door is open. And as a matter of fact, not just do you see it in the numbers of students that are coming to a university, but it's backed up by future collaborations with a lot of universities, including in China.
Yes, indeed. And even in the current crisis, the fact that our virologists are so close to, let's say, developing the first vaccines is thanks to the close collaboration with the academic hospitals in China, which of course were the first with really in-depth knowledge of the whole behavior of this specific and very dangerous virus. So international collaboration in research is, for us, has become the default, and it is not limited to the European Union. So it's that's the way forward.
I think I missed you last fall by a week or so when you were visiting Ethiopia and doing an agreement there with a local university. So I see that Leuven really lives up to its tagline that you have to discover the world. And actually, you don't start with yourself, you just start with the world. But Daan, I want to ask you, perhaps we get a question coming in from Thomas Henry relevant to this point. He says, okay, deglobalization, what does that mean? And what does COVID-19 mean for international free trade agreements with all the political pressure towards economic self-sufficiency? What do you think?
Yes, I think first I would say I think I want to nuance the idea that the world is deglobalizing quickly somewhat. I think you want to unpack globalization a bit, as Rector Sels highlighted. Collaboration in research is higher than before. We're now, look at the whole world is using Zoom now. We actually, before COVID-19, we saw a very rapid increase in international travel, including between China and the US. So I think this technological decoupling that you're seeing between the US and China, which is real and which will continue, I don't think is a sufficient statistic to say the whole world is deglobalizing. That's the first point I would want to make. Now, how is COVID-19 going to affect all of this? I think companies will want to diversify their supply chains, but that doesn't necessarily mean doing everything at home. It means rather than getting everything from China, also getting it from neighboring countries and diversifying your supply chains. And in terms of trade agreements, you could actually see that countries reorganize themselves around two blocks, around potentially US and a China bloc. So I think reality will be more complex.
Choose then?
It's hard for Europe. I think it's very much in Europe's interest to do trade with China and to do trade with the US. I think Europe has a leading role to play here in terms of multilateralism and collaboration.
Yeah, and of course you're one of the best examples on the personal front, living in the US and being married to a Chinese national, certainly helping our economic diplomacy between as a middleman between the US and China. I want to return quickly to the point of digitization and perhaps ask before we get to our experts again to Professor Sels. When I got my education, Professor Sels, that was still in the aula, which I loved, by the way, if I did manage to get to the class, which wasn't all too often, if I have to be honest. But nowadays, we're seeing a lot of online classes. Where is the University of Leuven on that front? Are we already an fully online university with online degrees? And is that going to be happening more going forward?
Depends on the perspective. So we had, when I became rector, we launched this very ambitious strategic plan. Chapter 3 of the 5 chapters of the plan is called Going Digital. But it includes a number of efforts, like, for example, strengthening predictive learning analytics, increasing the number of massive online courses, open online courses, but also moving towards hybrid classrooms, allowing to let's say, develop hybrid forms of education. Yeah. And it's actually all the investments from the previous years that helped us to get through this pandemic quite easily. So it is thanks to the investment that we now, let's say, are benefiting from the real returns. I mentioned the MOOCs. We currently have more than 20 MOOCs active on the EDX platform, the MIT Harvard platform.
Most people know what that means. Some people don't. MOOCs, massive online courses.
A massive open online course that is open to the whole world. And there we currently have around 200,000 learners. So you may say Leuven has 60,000 students. Well, actually, you have to also include 200,000 virtual learners that are benefiting from what we offer on the edX platform. For the future, I expect us not to move to, let's say, the typical model of an open university, but we will stick to, let's say, a quite significant degree of hybrid education, flipped classroom approaches, with students first, let's say, following classes online, and then being invited to interaction classes with smaller populations, smaller groups, focusing on cases, on intensive Q&A and so on. So the model will be hybrid, not online or on campus, but a combination of the two.
Yes. Well, we'll look forward to it, and perhaps that means that we can all come back to the University of Leuven, even if we're physically somewhere else, and we can follow some digital classes.
You already can. We have a top MOOC on vaccines, highly relevant today, and it was launched, I think, about a month ago, 2 months ago. It is now open for participation. So if you want to learn more about viruses and vaccines, you're welcome.
Okay, well, that's fantastic. I'll probably be one of your learners. I want to ask also Jan, of course, Jan van Hove, what that means for Belgium if the world indeed is going more digital. Does that bode well for the economy of Belgium? Because I remember in the early days, maybe even now, problems like e-commerce, not being able to attract neither the logistics nor the headquarters of innovative companies and of e-commerce companies. What's the situation now? What's the outlook now? If indeed we're going to a digital world, is Belgium going to become again the center of the world as it was in the heyday of the University of Leuven in the 16th century? Or are we back to some more darker days ahead?
Well, let's hope, of course. What we see, of course, is that we are lagging behind in terms of e-commerce, especially compared to our neighboring countries. I think of the Netherlands and also, let's say, the big American firms. They don't establish their subsidiaries in Belgium, but rather in other countries. But okay, I think we realize the situation has to change. And what I notice at this moment, also talking to lots of companies today, is that companies are stepping up their efforts to become more digital, to at least have a digital alternative. If I just may give an example from the financial sector, what we see, for example, within KBC now is that we are fully using artificial intelligence to develop new tools, new products, and so on. And it's really going extremely fast. And it's accelerating because of the Corona crisis, definitely, because you see people, cash payments are gone. Really, that dropped almost to zero. So you see, we are waking up in a new world.
In Belgium,
and
cash payments?
Even in Belgium, yes, even in Belgium. For the Belgians among us, we are a little bit conservative and we are a little bit hesitant to go for all these new digital things. But now you see people are picking them up very easily, and companies.
What's the number, Jan, if you have it? What's the percentage of payments that you estimate to be done cash or versus credit card?
What I can say, what people are currently spending in shops is almost the same amount of money that they used to spend, but it's all digital. It's all by cards and other things nowadays, Payconic and these kind of things. So it's really going extremely fast. And that's, of course, boosting businesses. In general, I think investment is under severe pressure. And so if you look at surveys, companies are, 1/3 of Belgian companies are saying that within the next 3 years, they're not going to invest anymore. But there's one exception, and that's the digital transition. So in this digital transition, their investments are still happening, and that's good news. But of course, it takes time.
And are there possibilities for, I say, investors? Jan Loeys knows a lot of investors in the US. He manages or advises at least their portfolio. If they say, I believe we're going to live in a digital world, are you going to be able to say, Jan and Hove, well, I've got the perfect company for you to invest in Belgium?
Well, what I know from a couple of engineers that I know is that, for example, the Leuven engineers are known as the brains from Leuven in the US. Well, I think brains are useful for every company. So therefore, I think it's a very interesting place to be for international investors.
Okay, we'll see if that indeed is the case. Jan Loeys, we're talking, of course, about the move to a digital economy. You say I don't really think that's such a major move, but we did see in stock markets, at least, that the valuation of particularly tech companies, big tech companies, was among the great winners. What do you see as an evolution going forward then, not just for those tech companies, but further ahead also for the for some other asset classes and the performance that they might have?
For short term, I'm a bit worried. It's gone a bit too far. It's very technical. And I do think the second wave is going to hurt us. Second quarter earnings, which we start in a few weeks, are going to be poor. I'd say overall. Longer term, starting with the dollar world in a nutshell, fixed income, you're what we call the US aggregate, 1%. So equities, US, I think global too, the next, I'd say 10 years, 5%. So a combo of that usual 60-40 gives you barely more than 3%. What you do in that world, what I'm pushing is not so much equities, not so much safe bonds, everything in the middle. Higher income, your high yields, your convertibles, your preferred, your real estate, your CLOs. That's a place to be as the best return on risk medium term.
So rather defensive strategy, you think will be paying off, at least for investors, if I understand correctly.
Correct.
Now, what I want to bring back one more time, what Minister Meulen said in her remarks that she prepared for this debate. She said, you know what, if I look forward, then what we need is two things. She said, one, we need confidence. We need consumer confidence. We need business confidence. And two, we need investments. To make the analogy with what Jan van Hove was saying previously about those Belgians with their wallets, well, they may not have cash in it anymore, but they certainly, said Minister Meulen, they will have to open their wallets. We need investments because otherwise we're not going to see a fast recovery. What do you make of that, Daan? Is that indeed what we need, is to spend more money, but then wisely in long-term investments? Or what do we do to get out of this crisis as soon as possible? And we'll just need to unmute you one more time.
Peter, if I can interrupt very briefly, I will have to leave for my next meeting. So I just wanted to say hello to everyone and to thank everyone for participating. So I will have to leave, unfortunately, but thank you for organizing this very interesting debate. So
that's absolutely fine. Thank you so much for staying with us for such a long time. Also regards from Rustam Baratov in New York. Yeah. He is hoping, of course, that he will be able to see some proclamations also for foreign nationals in Leuven sometime in the future. I'm not sure if that's something we can answer right now as you have to go, but certainly we hope that we can return to Leuven, all of us, whether for graduations or other activities. Thank you, Professor Sels, for joining us.
You're welcome. Bye.
Thank you. And then let's return to Daan for his comments about going forward, the investments that we need, according to Minister Male. Where are they going to come from? Are we going to see those investments? Are we going to see confidence from business and consumers as well?
Yes, so yeah, investments will be key, and there will be growing areas. We talked about e-commerce, public health, redesigning our public transportation system. There's a lot of growth areas out there. Now the question is, will investors and businesses be confident enough to invest a lot when the uncertainty is so elevated, despite the fact that investing is now quite cheap given low interest rates? And because of this uncertainty and sort of the importance for investors and businesses to sort of coordinate on a more positive outlook, which allows everybody to invest and demand to be stronger, I think there's a role for public investment, smart public investment. It's quite cheap now.
The government, again.
Public investment, yeah. So I'm not saying wasteful spending or bridges to nowhere. No, I'm talking about public investments funded at very, very low costs that increase not only demand today, but also the productive potential of the future. Infrastructure, research and development, education, renewable energy. I think it will help us to coordinate on a more positive outlook.
And is that something that we can then expect to see? Van Hove, you are close to the reality in Belgium. I heard Daan say we need investment, not wasteful spending, but smart investment by governments. Is that something that Belgium will excel in going forward?
Well, basically, I agree, of course. We should have more public investment, definitely in Europe, because in several European countries, public investment has been extremely low in recent years, for example, in Belgium. But there is, of course, the issue of the affordability. And for a country as Belgium, it might be dangerous to really speed up public investments at this stage, because we have already the cost of the corona crisis. If on top of that, you start investing even more, your level of public debt will go up tremendously. You do see that financial markets are still nervous. Spreads have been increasing in recent weeks. Okay, they came down after the new fiscal stimulus program by the European Commission. But there is always a risk if you overstimulate by increasing public investments, that this will come at a cost to finance your deficit and your public debt. So you have to try to find a balance there. Yes, you have to increase public investments, do it in an extremely smart way, I would say. But that's of course the challenge for policymakers today.
Yeah, absolutely. And perhaps a closing question for Jan Loeys, who is still with us right now. We heard that need for public investment. Is that something that you agree with? And if so, we heard from Daan a suggestion about investments in climate-friendly, sustainable solutions, because you were talking earlier about defensive investments, real estate, etc. We need, Daan says, sustainable investments in fighting climate change.
I'm going to give you a different answer. The Belgian minister was saying we need confidence. Yeah, but it doesn't come out of nowhere. How do you create that? I think what is lacking, we have a global shock. It needs a global solution. Governments are not cooperating. They're not working with each other. We've gone the other way, mostly across the big blocks. Europe initially did not go well. So the only way that governments can create confidence is by themselves working together, by opening up, by fighting deglobalization. That can happen across US and China. I don't have a lot of hope for that. Europe looks more promising. I think we need to remember how Belgium was created. Our motto was Eendracht maakt macht, l'union fait la force. Let's make it this instead of the old joke, l'union fait la farce.
I think, Jan, that there's no better way to end the debate than with that beautiful motto that indeed, if we do want to go forward and we want to get to a better outcome, that we need unity, and in unity we will find strength. I want to thank all the panelists that have joined us today for what was an extremely insightful debate. The first online debate of the KU Leuven alumni USA chapter. Surely there will be more to follow. If you want to find more out about the alumni chapter in the US, I can advise you to go to the website alum.kuleuven.be/USA-chapter. That is where you will find the new announcements. And of course, we hope that you will be able to join us again. Finally, a big thank you to our panelists, Jan Loeys, I have to say, from Georgia, or in Georgia, Jan van Hove, who is still in Belgium, and Daan, who is somewhere across the river in New Jersey, I think. Thank you all for joining us. And thank you, of course, to Rector Sels and Minister Male for having joined in the discussion as well. That's all from us, from our side. I hope you have a wonderful day, and let's make it a excellent future, despite, of course, the crisis that we're still facing. Thank you and goodbye.
Thank you for organizing. Bye.
Thank you, Peter.